But let's focus on a stock that got absolutely clobbered yesterday, Chennai Petro. But today, it's bounced back. Remember, the numbers in the past quarter were very weak. It was on the back of a sharp fall that we saw in the benchmark GRMs or gross refining margins, as well as higher forex and inventory losses as well that hit the earnings. Mr. Arvind Kumar, the MD of the company, joins us. Hi, Mr. Kumar. Good morning. Well, give us a couple of details. Could you tell us what was the inventory loss that you incurred in the past quarter? And also, if you could tell us the GRM, that got hit hard. How much of it was due to export duty on ATF and diesel?
Thank you very much for inviting me. And see the GRM part, the inventory loss you asked, the inventory loss was around $4 per barrel. And the GRM, the core GRM was around $8.4 per barrel. And because of the inventory loss, it could sustain the overall GRM of around $4 per barrel.
What is the impact of windfall taxes on your profit? I mean, in terms of dollar per barrel?
See, the windfall taxes are definitely impacting the profitability. And maybe if I count roughly, that may be around $10 to $12 per barrel.
10 to 12, okay. Actually, if you can tell us what you meant by a statement in your release, you said windfall taxes reduced refinery transfer pricing.
See,
what do you mean by that? What is refinery transfer pricing?
The refinery RTP, the selling to the OMC, it occurs on the RTP. So it is our price what we are giving to OMC, basically to Indian Oil, our holding company. And this is the RTP which decides the the profitability.
Fair.
And the RTP was affected as per the government norms. And that RTP effect due to windfall tax, though it is being reviewed periodically, and the quantum is also, we have to look into that what kind of quantum and frequency has to be set in the letter.
Okay, so you said that the inventory loss impact is about $4 a barrel and the windfall tax impact is about $10 a barrel
10 to 12.
$10 to $12. So going forward in the second half of the year, from this $4.5 a barrel that you're sitting on in Q2, what could the average GRMs be?
See, you also know that in Q2, when it started, the crude prices, they came down from around $110 to around $98. So that was the reason for the inventory loss. And today, the prices of the crude is hovering around $90 to $95. And we expect we remain here or to reduce. And that depends a lot because it is a huge uncertainty. And if it remains so in the $95 per barrel, the inventory loss will not be there. And if it goes up marginally also, the inventory loss will not be there. But if it goes down considerably, we will look into that.
Okay. What are the current cracks, Mr. Arvind Kumar, for diesel and petrol?
See, the diesel, I think the current cracks are quite good, around $42. And the ATF
Petrol.
also, ATF also around 26 to 28. It is hovering, it is, it is volatility is there. It is very difficult to pinpoint.
Okay.
All right, Mr. Kumar, the other worry besides the operational performances, debt has spiked up. I think it was at around 3,000 crores odd. It's moved around 7,500 crores. By the end of this year, what will the debt number look like? And also you have a couple of expansion plans, right? What is your capex outlook for this year next?
But if I put it into different perspective, the debt has come down to around less than 7,000 crores. It is around 6,900 crores. Previously, in the March, I think it was around more than 7,000 or 8,000 crores. So debt, debt levels are reducing. It depends on the margin. And our debt equity ratio now is around 1.25. That's also, we are trying to go down on it. So it's the margins when we collect the cash and all that, it will improve. So we do not look much into the debt, and that is under control. And we want to increase the GRM part, and the GRM part, the core GRM is still strong. It is around $8.4 per barrel. And we may, if the inventory loss is not there, we may sustain it to $8 to $9 in the coming quarters.
Do you not have to borrow for the Nagapattinam refinery?
Please repeat again.
The Nagapattinam refinery, you hold a 25% stake, isn't it?
Yeah.
So you will
So
borrow
the-
for that?
No. The equity portion will be done from our own accruals, and our equity portion is around 2,500 crores, and we have already spent around 750 crores.
Okay.
And the rest of the the expenditure will be met in the accruals.
You know, Mr. Kumar, what is the difference between RTP and windfall taxes? And are they both reviewed together?
See, RT windfall taxes have been put on the the domestic refiners who are exporting, but as per the government policies, they have also affected those taxes into the refinery tax RTP. So those the export taxes, whatever is coming, that has been affected on the RTP. So those roughly on diesel roughly around $26 per barrel, and the ATF also around $12 per barrel. It will be reducing the margins or the cracks what we have today of the the around 42 or 26. So it will reduce the cracks substantially.
By $10 to $12, you said, right?
Yes.
Okay. You did mention that the core GRMs you're looking at would be in the range of $8 to $9 a barrel. This is by the end of FY23, is it?
Yes. See, the H1, if you see, still the core GRM is hovering around $15 per barrel,
$15,
because in Q1 we have done around core GRM was 22. It was better than the Singapore benchmark.
Okay.
And the core GRM and this Q2 also, it is a positive figures. So GRM will go certainly more than $10 if the
Okay.
situation remains like.
Okay, so more than $10 a barrel GRM is what you're looking at. Got that. In terms of demand, you supply to a lot of sectors, power, fertilizers, petrochemicals. Can you tell me where is the big demand coming in from, and would you at any point look to scale up your capacity expansion?
See, the demand per se, the demand is the Chennai Petroleum meets the demand of the Tamil Nadu state in particular, and other states, neighboring states as well. And we also give our feed to the various neighboring industry where the Manali industry is situated in the Chennai city.
Okay.
And those around the chemical and petrochemical industries, around 20-24 industries. So a lot of propylene-based feedstocks are going. And this is the thing. And we are in this scenario when the cracks are less or something like that. We are also making around 7 to 8% specialty products. That may be hexane, that may be wax, hexane, MTUs, propylene, those things. So we would like to increase those, and we are working on those projects which will give us the profitability from our specialty products, which we market ourselves.
All right. We leave it at that. Mr. Arvind Kumar, pleasure speaking with you. Thank you very much indeed for joining us.
Thank you.
Hope the rest of the year is better. They had a